Hello everyone, welcome to the elliotwaveforecast.com YouTube channel. Today is October 26 and the chart of the day today is the S&P SPX. Now this is cash market. That means it's not futures, right? It's not 24 hours, only opens when the market opens. 45 minutes time frame here. Now we are looking for the S&P to finish this wave 5 soon. Wave 5 in a minor degree in the red color here. So subdivides into 5 waves down. So I think the structure actually is a little bit mature and we could be finished first. We could finish soon. Then from there we can see a trace rally to correct the 5 waves down. So if I zoom out, let's put the 5 waves in the higher time frame. So this is your 4, this is your 3 here. We're looking to finish with 5 now, and that will finish A, right? You can see the A here. So that means it's a correction, but since it's an A, that will mean we have for the downside, right? Because then you will have a B and then a select down. So this is 3, 4, 5. So this one is your 1 and 2. So we're talking about the decline that started from July 28, right? July 28 here. And if you look at the decline from here, 1, 2, 3, 4, 5, then we are looking for some kind of a diagonal here, right? So 1 and 4 overlap. It's not a big deal. It's a diagonal, okay? And that will mean that once we finish these 5 waves, now because of the 5 swing, right, that means that actually is now looking for the downside. So 5 swing is incomplete sequence, right? Corrective sequence is always going to be 3 swing like this, ABC, right? Or a 7 swing, which is a double zigzag, like ABC, X, ABC, that's a 7 swing, right? 5 swing is what we call incomplete. It is a motive sequence. All right, so now just because we are saying that in the 1 hour we can potentially rally, that doesn't suggest that we need to pick the low, because it is a 5 swing, guys. 5 swing is there's really not a way for you to know exactly when it's going to end, unlike 3 swing, right? Correction is simple. Correction is very simple, right? Correction is against the trend, right? The trend is going to be 5, for example. Like the correction 3 swing is always, we always know it's going to end between 100% and 161.8. Same when you rally. Let's say the correction is going up. So let's say it's bearish market and then correcting in 3 swing. That's also going to be in 100%, 161.8. The third swing target here. But 5 swing, we don't have a target, guys. It can continue to go as much as it wants. It can even become another structure. Now, let me show a couple of different ways to label this. Again, all we know is that 5 swing is incomplete. Means we will have more downside one way or another. Now, there are a couple of different ways we can have more downside. One way is what we are presenting here. We will have a B leg and then going down again. Now, some people think this is bullish. It's not bullish, right? 5 swing suggests more downside, and this is just one possible path, right? After you finish with 5, we got 3 waves and then lower again, and we don't even know where wave 5 is going to end. We can continue to go lower here. It can continue as much as it wants. There's no 100% to 161 point, unlike 3 swings ABC or 7 swing WXY. Okay, another possible path is going to be, this is not 1, 2, 3, 4, 5 diagonal, but this is a 7 swing. So you have a 3 swing down, zigzag, ending W in the larger degree. And the correction ended here as your X. And then you will have another ABC zigzag down. Now in that case, you notice we will not rally that much. We will just rally to correct this and then go down again immediately. And this is going to become another 6. This is what we call a double zigzag. Is a 2 sets of ABC and then another ABC again, right? So that's why if you rely on this and think, oh, it needs to rally big, it's not. We could be rallying only this and go down again. So like I said, the path can take a couple of different forms. 5 swing for 5 wish diagonal is just one possible path, right? This WXY 7 swing is another path, which is also going down. And then yet there is one last path, which is the most aggressive path. Let's say if we have turned more bearish, right? I mean, the market, I mean, of course, you don't need to speculate. Everybody speculates it's going to crash since 7 years, 10 years ago. So, okay, again, I mean, unless you are completely new to the market and hearing all the, talking about the crash, a lot of people predicting major crash every single year from, I don't know, since 2008, right? So we continue to make, a high so far. So we don't need to speculate on anything, but this is the most bearish count, which means that we are looking for a 1-2 and then another 1-2 again, and then we're doing 3 of 3, and then it's gonna just continues to collapse like this, like a 3 of 3 and then 4 of 3, 5 of 3, and then ending 3, and then continues to go down. Right, so there's no reason to call it this way. All right, so for now, I think what we can conclude, right? What we can conclude simply is that because of the 1, 2, 3, 4, 5, we will have more downside. That's all we can conclude. Now, whether the more downside comes from this bearish count 1, 2, 1, 2, or from 1, 2, 3, 4, 5, like what we are presenting, finishing diagonal first, rally first, and go down again. Still going down again regardless, even if we get a rally first, right? Or we can also do WXY and then rally. The rally is not going to be, this rally is not going to be correcting 5 ways down, but it's only correcting this move down because it's a WX, and then going down again, right? So 3 possible paths, which I think the nest 1, 2, 1, 2 is the least likely, and 5 swing diagonal or WXY is the most likely. I think the two are equally possible in my opinion. All right, so that's the update, guys, and as always, we're going to continue to update this in the 1 hour time frame. If you do want to get more regular updates, you can check our service. We have 14 days trial. The link is in the description of the YouTube video. I'll see you all again next time, and have a nice day, everyone.